You mentioned there thinking like the markets. How does one think like the markets? How does one get a market perspective? What do you mean by that?
Well, I'm going to draw on probably my main mentor, Mark Douglas. So you got to go to probabilities. You got to start thinking in terms of probabilities, and you got to understand that the probabilities come from an evidence-based edge, if you like, statistical edge. Because where else do you get probability? Probability by definition is a number. It is a number, between 0 and 1, and you have to work out what probabilities you are going to believe in your execution in the market. Now, let's just go back to what we started off with, talking about stories, about emotionally charged copy that people write about stocks in the market. Well, what you're putting your faith in there, if you like, your belief in there by going along with that becomes the number one determination of the decision you're going to make. Well, in the market, the language of the market is not English, it's price. And so getting an understanding of how prices move, where buyers and sellers are, and how that flows into trends, and how you can take advantage of trends on a probabilistic basis is really how you've got to overcome your societal thinking. So how do you take on a market paradigm? How do you take on a way of thinking? How do you become empathetic with the market? You've got to become empathetic with the way prices move, and you've got to overcome and disregard English words. The price of the market, the language of the market that you can both read and hear, listen to, is price. And that's what you have to instill your beliefs in. And when you do that, you move from a societal paradigm to a market paradigm, and you start thinking in terms of probabilities of price movement. Then you start becoming empathetic with the market, and that's when you make this big transformation to having a snowball's chance of becoming successful in the market over the long term.
Yeah. So in terms of doing that, by learning that new language, you're starting to desensitize yourself to the language, the English language, and that's obviously going to have less of an impact on whatever decision process you're making or following.
Correct, because when you start understanding price and you start becoming empathetic with its movement, you realize that there's no price that goes up in a straight line all the time, and there's no price that goes down in a straight line all the time. And you start then seeing trends in different time frames. The trends can start all the way down to 1 minute or even tick data, right? At the very lowest level, and then you can go to 5-minute data, and all the trends will occur. 5, 15, 30-minute, hour, 2 hour, 4 hour, 6 hour, etc., etc. And that's what intraday traders look at, and they're making lots of decisions every day. And then you can see the price movement then on daily charts and weekly charts and monthly charts and all these time frames. There are trends happening in all these time frames all the time. And what we've got to do, and that's why the market is, Mark Douglas's term as he came up with, is an endless stream of opportunities in all different time frames. And what we've got to do is pick a time frame that we want to execute and that's conducive to our lifestyle. So we can pick that time frame. That luxury exists in the market to pick that time frame that you want to invest with, and how to derive profits. And when you start seeing the price action and understanding that retracements and markets falling is just a natural part of the environment, it's just the way the organism works, it's the way that ecosystem works, is that down markets are as natural as up markets, and they don't continue forever in either direction. And when we can create a statistical edge, a statistical platform on which we can place our beliefs, we can start moving away from that societal paradigm. We can start moving away from short-term volatility affecting our decision-making. We can start moving away from noise, which gets massively amplified when markets are negative compared to when markets are positive. And we can extract our decision-making out of that. We can overcome those things that are detrimental to self-sabotage, and we can start placing our belief and our faith in a set of evidence-backed numbers that will keep us going consistently over the long term. And then we start taking on a market paradigm, a way of thinking empathetically with how the market moves. And then we start becoming more in tune with the market. Does that mean we win every time? No, but we don't need to win every time. We just need to win enough. And when we do bigger, our wins must be bigger than our average times that we lose. And then we can start creating this equity curve that has the steadily rising gradient, was, again, to use Mark Douglas's words. And when we get that steadily rising gradient through all market conditions, then we're onto a long-term, peaceful way of investing.
Yeah. If you're still embedded in the English language in terms of your understanding of the markets, you're going to have a lot of, you touched on this earlier, recency bias,
yeah.
rather. And, detaching yourself from those biases is a very difficult process, isn't it?
It is, because the way we become programmed is really through the amount of energy that gets put into whatever experience we had, affected us. And so recency bias is certainly one of them. So but if you look at noise is all English based. All of it, everything, it comes from all the media and every other input we can get. It's all English based. So we've got to start detaching ourselves from English based input to make our decisions in the market. And we've got to go to some other way of making decisions. So when we have a societal paradigm, the negative events in our lives are highly emotionally charged because of the pain we felt. So the higher the degree of pain felt, and the example that Mark Douglas uses is the young boy getting bitten by a dog, where the simple logic kicks in that says, I got bitten by this thing called a dog, which caused a high amount of physical pain. That dog is dangerous, therefore all dogs are dangerous. And bring that into the market, and that happens to us. It's touching the hot plate. It's the relationship negative emotional pain. It's the whatever. It's the getting tackled on the football field, high emotional pain. It takes time to get back, falling off the bike and getting breaking a limb or something like that. It takes a lot of effort to get back on the bike, to go back out onto the footy field, to start another relationship, because there was so much negative energy that went into that particular event. And in the market, that emotional pain, the dog getting bitten by the dog, there's so much emotional pain in a negative market environment that it's difficult to get back onto the bike. So we have to retrain the way that we think to be able to overcome that highly negatively energized event that we had. And we have to start de-energizing those beliefs that go along with, the dog bit me, therefore dogs are dangerous. I had a big downtime in 2008, therefore the market is dangerous, and all the other walks in life. And we have to start de-energizing those negative beliefs, and we have to start energizing, positive beliefs, which means you have to step into a process to reprogram the way that you think, to overcome noise, to overcome short-term volatility, and to overcome your societal paradigm. And it's not easy, but you can either give up at the start and not do it, or you can step into a process. And the process that Mark Douglas spoke of after his decades in the markets and coaching so many people in the books, is the only way that he believes that could be done is with a mechanical system, where your decision making is based on evidence that comes from the market. It comes from price. It doesn't come from English. And then to start executing that process and understanding that, getting into that probabilistic way of thinking. And he said that was the only way you could reprogram or even program yourself to start to overcome that highly charged negative environment and start building an experience that's based on success.
Yeah, so that you're becoming so much more objective in your assessment of what's going on compared to being subjective.
It's key. That is it. It's moving, it's transforming from subjective, volatility, societal paradigm, noise-based decision making into objective, no wiggle room was another Mark Douglas term that he used. You won't see that written in any of his books, but a no wiggle room way of making decisions, and then executing a probabilistic edge. That's effectively what it comes down to, and then slowly building, getting back on the bike and building confidence and belief and consistency, into the way you make decisions in the market. Yeah.
So really, we just talked there about transformation, and it's really a mindset transformation, understanding the frailties, if you like, of operating in the English world of investing compared to, a more objective, rules-based environment.
Price-based.
Yeah.